Hey everybody, Goose, good morning, my man, Lieutenant Colonel Goose in the house. So, Infinity Searching, Michael, Arturo, Valerie's, Francois, Rongamer, glad to have everybody. Now, if you want to chat with me just like these fine folks, Alan, good morning. Click the button right down here, right where the monster is, and little green overlay button, be a subscriber, and then a few seconds later you can chat on the live stream with me. And if you're having trouble with that while I'm live, I'm sorry. That's a YouTube problem, not a me problem. You might have to log in or log out or do something to your YouTube. And if I'm no longer live, the chat's going to be disabled. You'll have to leave me a comment down below. Lots of people did that yesterday. Thank you so much. I love the interaction. I love the feedback. Like to know what you guys like to know and like to know what you're not enjoying. So if there's anything I talk about that's just boring and crap, just let me know. I'll definitely try to adjust. So it's about what you need, not what I need. Just sharing stuff I see. Good morning, Dan, Craig, Maurizio, Pat, Space Cowboy. Good morning, everybody. And so is AI played out? Are there other opportunities? Where's the market going? Let's talk about it. So, pop on. All trading involves a substantial risk of loss. Just because I talk about a trade doesn't mean you should take it. I may be completely wrong. Past performance, not necessarily indicative of future results. I may never get it right again. I mean, let's be honest. Now, this presentation is intended to be informational, educational, and fun. It is not a recommendation to buy or sell any financial instrument out there at all, and anything else from anybody. Don't buy stuff from gurus, right? Unless you trust them and you really think that they got something that they can help you. Now, if you desire personal financial advice, remember, that's not what I do. You got to hire and consult a financial advisor that can, take into consideration your financial situation. Has a fiduciary duty to do that. So that's a key word there too. All right. Morning, everybody. Morning, Philip. Morning, Donald. And let's jump into it. Now, I brought some fun stuff. So every morning disconnects this computer. Like, we had a nice rally back up into the box yesterday. Right up into there. And check this out right here. Remember? Now, let's divert away from AI for just a brief moment. Remember when Bitcoin and NASDAQ were basically like trading the same thing? We have a Bitcoin got a little extra excited here, and NASDAQ finally caught up over here. But right now, NASDAQ outperforming while Bitcoin kind of dropping. So opportunity here that Bitcoin turns and burns, or NASDAQ turns and burns. Is Bitcoin leading or is NASDAQ leading? That's the big question. We've seen divergence before. We've seen NASDAQ come down. We've seen Bitcoin come down. So we've seen divergences before, but they tend to come back together. So just be careful. One of these things might go find the other. Now, let's talk about, I can't remember which tab was which. Yeah, here we go. AI. So the real AI. Lily and NVO. Sledge, if you're here, you enjoy this. So in the purple, we have Lily up 300%. Now this goes back to October 2 years ago, 2020. Well, yeah, October 2020, 3 years ago. So over the last 3 years, Lily up 300%. Nova Nordisk up 199%, while NYSE Fang only up 54%. So this is the AI, supposed to be the AI banger right here. Going back 3 years. Looks like drugs that make you not fat, probably outperforming AI. So that was kind of eye-opening for me. And no sign of slowing down either. Now here's one interesting too. We have NVIDIA in blue versus, and this comes back to October last year. This is the one I was thinking. October last year right here. No, 21. October 21. 2 years. Totally goofing my words here. Welcome to being live. Anyway. All right. NVIDIA in blue. Nova Nordisk in orange. And Eli Lilly in purple. Eli Lilly crushing them. 148%. While Nova Nordisk and Nvidia only up about 100% over the last 2 years. Nvidia definitely took a big dip and was rallying strongly off that dip. I mean, if you had bought in down here, pretty huge outperformance. But if you're in it just to invest, I mean, investing in diabetes drugs, they show no signs of letting up. Nova Nordisk has opportunity to potentially catch up, about 50% behind. And Nvidia, after this massive run, probably likely to correct it a little bit. And we saw some correction in Lilly. We saw some correction in a couple times in Nova Nordisk. And off of this low right here, we haven't really seen Nvidia give up much correction. So, yeah. Drugs to not make you fat. What I buy? It's limited exposure. Definitely there. I definitely see higher potential. I mean, they're just scratching the surface, and there is potential for it to go wrong. Also, on the other side, if side effects or anything start creeping in to these A1C and appetite suppressors, A1C controllers, and appetite suppressors, you could see some issues. We're talking about it like Wegovy and Ozempic, and there's a whole new family, and they're adding some new compounds to them to help them do some other things to you. All with the goal of helping Americans not be fat. I mean, I go out there and I just look around at the people. Heck, Kimberly calls him my old man best friend, my neighbor, Donnie. He takes Ozempic, and I mean, my sister-in-law takes Ozempic, or no, she takes Wegovy, and she sometimes shows up on the chat. Terry, if you're here, let us know. Manjaro, yeah, that's another one. Maybe that's the one she takes. I can't remember. Manjaro. Maybe she takes Wegovy. I don't remember. There's a variety of them, and they're projected to be over $50 billion, as Goose says in the chat. So, AI, despite making all the news, not necessarily the hype train. And I mean, there's a much bigger market for large people, I feel like, than there are for GPUs. Just go to Walmart. I'm telling you. So anyway, this one's interesting too. This is Citibank's economic information in the U.S. surprises. Surprising to the upside versus the S&P 500. Usually we see some surprises to the upside, and then we see S&P start rallying to catch up. Surprise to the upside, S&P rallies to catch up, while the surprises kind of dip. We're going on another cycle. We could see a little dip in S&P, and then probably go catch up. So, how do you get this chart? This is off of a Bloomberg terminal, so I'm not sure I know how to find that. I'm not sure that's in TradingView. Haven't looked it up. And another one here. Hedge funds shorting surges. Now, this is interesting here. We have the prime book, U.S. equities. Make this a little bigger. Cumulative short flows ramping up. All-time high this year. This is this year, 2023. Short flows, 20% right there. Cumulative short flow, right-hand side, 20%. Weekly short flow, left-hand side. We're seeing about a 3% weekly inflow of short flows. And it keeps stacking. People are going short. Hedge funds may not end well. We may see another squeeze building up here. So these are all things I kind of keep an eye on. Another way to look at it, I have to make this one bigger. And right there. So brace for another squeeze breakout. This is out of the JPM trading desk report right here. So cumulative short flow across U.S. equities is at a new year-to-date high. So huge amounts of shorts coming in. Hey, Alex, we're talking about short flows. So, and AI stuff and fat drugs, or make you not fat drugs, as Beth says in the chat there. So all sorts of stuff that happening. Now, oil potentially breaking out too. I've been talking about oil a little bit. Potentially oil going to outperform. Set my phone over here. Nope, you still see my headphones. put it over there. Anyway, let's talk about charts. What's moving today? Not a lot moving today, actually. Charts are kind of a little bit bare. Now, we're coming up into resistance. This can turn down. Be careful. This was like a little baby. I need to zoom this up so we can actually see what I'm talking about. Zoom it up right there. Get this right here. I got concerned yesterday because it came up right to the reversal zone. 618. This is like a potential 1-2 setup off the high. We can, if we turn down and break below this low, we're probably on that path, that purple path, the light purple path, down to the roadmap line. So zooming back out a little bit. If this breaks below that low, this is very key right now. 44.50. We break below that with a daily close. That's probably the target. Right down there around 4,300. Could take us late into the month. Got concerned when we stopped right there. All right. This is, you got to know your time frame. Like I've talked about a little bit. If you're investing, if you're an investor, you feel like you're investing for months, you want to be with it for a while, just forget all this, near-term crap. All right. Don't get spooked out if we go lower. Don't get spooked out if we chop around. Your time frame is months. If your time frame is days, and you're looking for a breakout or a breakdown, you gotta pay attention to these levels where we stop. All right. We start getting above that 4,900 level, we can go higher. We've made a dip in the pre-market, kind of holding. We were turning back up. I don't like to be completely out of the market. It's just a personal preference. I like to have a little risk on to the upside, and a little risk on to the downside, and I kind of manage it as the tides turn. Right here, I lightened up on shorts and kind of went more long, and then lightened up on the longs, went more neutral, added some back, lightened up. You gotta know your time frame and keep track of where you're at. So it seems like I flip-flop a little bit, but it's about opportunity. Where's the opportunity? Right now, this came up to a level where we can turn down hard and fast. So if we get a big drop and we break below that low, there's the target, 4,300. We get to 4,300 and stop, opportunity to add some back for going higher. If we just break out, we get higher than the highs back here, get above the box, we're probably going on up to these upper targets, 4,650, 4,700, maybe a new all-time high. All right. Keep in mind your time frame. What are you watching? Know when you're wrong. It's not about being wrong that costs you money. It's staying wrong that costs you the money. So know where you're wrong. Know where you expect it. Know what the paths are. If you don't know how to figure it out, just keep asking. That's what I do. This is what I do for a living. This is what I'm here to help you guys figure out what I'm seeing and pass that along, and try to give you some insight into what I expect next. So I am cautious right now that we could see a breakdown, because this is a perfect setup for a 1-2 or an AB, and we could see a significant downside from where we are right here. Yeah, significant, going from 44.87, almost 4,500 down to 4,300, 200-point loss on the S&P. I feel like that's kind of a significant potential downside. If you don't agree with me, let me know in the chat. But I feel like I should let y'all know these things when they show up in the charts. All right. Like I said, let's talk about what's actually moving today. We've got about 30 seconds before the market opens. S&P yesterday showing a nice rally, but again, if we look at the chart here, we came up to the 50% and stopped. S5FI was in the reversal zone, couldn't muster a move up with any significant gusto. We could see a lower low dip here. So just putting all the little pieces together. I don't feel like this is a leading indicator at all, so it just gives me a status, where we are in the market as far as, are we ripe for going higher, or are we ripe for going lower? When we're in the lower end of this thing, we have conditions to go higher easily. When we're in the upper end of this thing, we have conditions to go lower easily. So, all right. It's the ugly truth of trading is there's no clear path most days. So, and there's the ES getting the pullback. Like I said, if we get below, got to keep an eye. We're getting a significant move down. If we get below that low from just a couple days ago, 44.30, probably going on down into this zone right down in here around possibly as low as 42.50. So right down here is the zone that we have to watch out for. So, first resistance there, we dipped below it, and that kind of softened it up. If we break below it today, watch out. We could experience an outsized swift move down. Be cautious. All right. Stay vigilant. The account you save may be your own. We're definitely seeing some softness here. And when we take out the contract rollover, ES did roll over. We got the gap. That's like a 50-point gap, indicating that futures traders kind of more bullish on December than they were on September. Seeing contango, I talked about that quite a bit yesterday. If you can go watch that video from yesterday's live stream if you want to know more about that. Take out the contango, and here we go. We came up, did kind of a weak rally, really just hitting the 50%, similar to S&P. And when we can take into consideration the contango, we got a 618 retrace. This thing could extend lower if we get below that 44.30 on ES. ES and S&P, a little bit different numbers. We get below that 44.30 low right there, probably coming on down to the daily roadmap line. That on the futures here appears to be somewhere around 43.27-ish for the September contract. This one, of course, expires this week, so it will no longer be available here in a couple days, and we'll have to use the December contract. All right. In Q with the gap, made a higher high yesterday than we saw right back here in 1st of September. Positive, but getting slammed back down. That could indicate that we're going to get a significant retrace on NASDAQ. Be vigilant, all right? We start breaking above that high, game on for continuation. We start breaking below that candle, we just get a couple inside days. That's indecision, all right? Inside days are when the candle sits inside a bigger candle. Like this red candle, if we closed right now, that was the end of the day. That's an inside candle because it sits inside the range of the day before. That usually indicates the market's just not feeling it. Now, we do have some risks coming up later in the week. Tomorrow, CPI before the market opens. Thursday, PPI before the market opens. So you see inflation talk for the rest of the week. So just keep it in mind, all right? We do have some economic news items. Yesterday, I was speculating that maybe Russell was working on something like this. Didn't really see a pop. Unless that little baby thing was it. Just keep it, this is a pattern for going lower, potentially. Have been unable to break above the roadmap line, though. Caution. We could just break down here like that. Staying here, that's continuation lower. And the target's down here. If we break below these lows here, we break below this orange box, probably coming on down into the 1750, 1760, possibly 1780 area, right down there. It looks best at 1750, right down in here, even without the head and shoulders. Head and shoulders just adds another layer of confluence of different things I see to support a move down there. And that's small caps, that's IWM, if you're unfamiliar. ES was, S&P 500, that's SPY, if you're unfamiliar. NQ, that's QQQ, that's big tech. If you're unfamiliar with these tickers that I'm pulling up right here, these are the futures. It's how your mainstream media talks about like what the market's doing before it opens in the mornings. I like to watch it because it trades all night. Oil almost to the aggressive target at 89.70. The super aggressive target up here at 93.94. We could go hit that pretty easily. So keep an eye. I may jump off at 90. My UCO position. I'm pretty darn profitable in it, and hate to give up money. Hey, there's Kimberly. A couple of people were talking to you, Kimberly, up in the chat above. And GC, back to the roadmap line. That probably means the dollar getting a little rally, although it's not making the highs. Interesting. Interesting dynamic. Everybody says, the dollar and gold move opposite each other, but those two charts don't look like opposites. So definitely some different dynamics playing out in gold. And a failure to launch here. If we get below these lows from back here in June and August, we may be in for a deeper retrace right down here. Gold notorious for extending corrections and really shaking people out before it goes aggressively, takes an aggressive move higher. And maybe what we're doing here, flushing out some of the aggressive or some of the weak hands here. That was a lower high, higher lows, watermelon seed squeeze type situation. We may flush it out and then go. Yeah, that's not unlike what Bitcoin flushing out yesterday, didn't get a lower low, but rallying back strong this morning. Not above the box though. If we get above the box, above the roadmap line, game on. I did add, I wasn't making this public, but I'll make it public now. I added about 150, probably more than 150 contracts of BT yesterday. Now, this may end up being a poor decision, but I bought $2.50 calls out to January 2025 for less than $1. I'm sure today they're more than $1. And I shared this with my VIP group yesterday when I was buying. I ended up buying close to a goose. I kind of showed you. It was probably close to 200 contracts total. I had some prior, so at the end of the purchase, I think I'm close to 200 contracts at 250. Looking for this thing to go to probably 30 on next year on the big Bitcoin run that I think is going to happen. Now, am I buying altcoins? No, I'm buying crap coins, shiz coins, as somebody commented yesterday on the video. No, I don't like all that stuff, but there are opportunities right here. And with the options, you get 30 times your money if we go to 30, 32. So I threw some money down on that. Probably have like 15,000 at risk, maybe. It is moving up. It's almost a 250. Those 250s are going to be in the money very soon. And maybe go up quite a bit. That's a measured bounce setup right there for going higher. Ether got close. That got a lower low. That one got close to being the flush out. That can be the bottom on an Ether. That was actually a really nice candle. Right in the target zone. Look, almost dead center for my target zone. Took a little longer to get there, but look right there, that low. Draw it across. Right there. We got there. Took a little longer than took an extra 3 months, but we got there. This can be the bottom now. I'm pretty satisfied with that aaction. It could dip a little lower. Entirely possible. Don't buy it yet. I wouldn't buy it until we're back above, getting back above the roadmap line, really. That's the best bet. Aggressively, you could buy it on a move up through this consolidation, right up here at 1670. And this is the futures, not the spot market, I know. But futures have been running pretty close to the spot. And this chart looks a little cleaner than the spot market. So, all right, I need to refresh the list because I've got some different stuff on. Smuckers was not the number one. MSTR, look at that. I haven't seen Sledge, but I know he was on this one before. Had a little false start, return, higher low. We break out above this stuff here this time, and then a confirmation kind of. It's like a super aggressive, more conservative, and then target up here. 515, 567 potentially. So there you go. That's another potential Bitcoin play right there. That one played out to the 272 last time, which could be 666, 670 area, 660, 670. Could see that. There you go. There's Sledge. So there you go. MSTR looking pretty sweet there. And this could take a little while. This one could, JT thinks this is kind of like just speculating, just kind of rough. I think we see a rally into late this year in Bitcoin, possibly a lot of the miners. We see a pullback into the halving. I think gets a little too excited. Possibly we get some, we have October 14th, we have some decision on the spot ETFs coming up. And if it gets punted, that news won't come back around till January. We could see a rally into January, or we could see this go sideways into January. I'm not sure exactly which one. I'm kind of thinking we may see a rally into that time frame, maybe a pullback. And then when the halving event hits, like March, April, that could kick off a big run that lasts well into all the way through 2025, possibly into 2026. And then we'll see crypto winter again. So big picture, keep it in mind. What's your time frame? I am long-term time frame right now on much of my crypto exposure. So MLTX, nice pop, not really breaking out higher. Got to be careful on that one. I can retrace it. That's a pharmaceutical. Remember, there's four things that don't really follow my patterns. Biotechs, pharmaceuticals. That's why I have the biotech thing here. Biotechs, pharmaceuticals. Don't those FDA drug approvals, denials. All that sort of stuff. The surprises breaks the patterns. China stuff. China lies. Let's be honest. They're not held to the same accounting standards as U.S. companies. So China stuff. Another one that doesn't always follow the patterns. Leverage stuff. Leverage stuff doesn't follow the patterns. It's skewed. That's why I tend to go to the underlying. Leverage things are skewed. They skew the numbers. They skew the targets. They skew the moves. So be careful on leverage. And then low price stuff. Stuff under $10. In that ballpark, $10 doesn't tend to follow the patterns all the time. Now there's also the other things that happen out there, like, hey, our CEO that invented the technology of our company got caught with a Lambo full of blow and 4 underage girls. I mean, that kind of news is going to be detrimental to any company and may break the price chart. But for the majority of stuff out there, I don't pay attention to the news. So WRK, right up near the 1272. That was beautiful. Looked like it went for the upper pattern. Right up 36.80, and then potentially a little retrace, and we could push out to 38. Where's the next path after this? Retracing back to the roadmap line. All right, the last time we got this move up, went like that. This one could take us as high as up there, but I don't see it as highly likely right now. These things tend to obey the fib lines as resistance. We could chug on up there, but probably get a little retrace, get a little pop. If we're going to go up like that, that would be the classic move right there. ASTI, reverse split. Oh my gosh, reverse split. 1 for 200. That's highly bearish. Highly bearish. This spring, I bet this goes back to $1. Dumpster fire right there. Be careful. Be careful. I learned about reverse splits early in my trading career. My dad knew some dudes in Oak Ridge and bought into a company, iPix. If you've been around eBay since the early days, iPix was super hot, and you had this cool technology where you could take a few pictures and it would do like a 3D picture of the product. And iPix was partnering with eBay, and everybody was using that for their listing. It was super hot. My dad, put some money on their company, and I think they got an argument over who owned the IP, and The contract with eBay went sideways, and they reverse split. And needless to say, nobody knows what the heck iPix is. Probably, yeah, it's not around anymore. So be careful on reverse splits. SLRN getting slammed. That one looks like not a long history. And watch out below. Looks pretty gnarly. Lowest low that can, I mean, I don't even have, we don't have enough price history to work with, but there's the 1618 right down there around 890. ASML came down to that other box. This one's just so high priced, and we may do the 618 retrace. This one may be on a path back down to here. And it could take it a while. I mean, it could. This is going pretty fast, so we may get that 618 retrace. Oracle, disappointing on their numbers, and double topped it. Probably doing a deeper retrace at this point. We exceeded the upside target. Now time to do the retrace. Let's clean this up just a little bit and get a proper retrace. That was the extension. I mean, that was it. Retrace off the low to the high. Looks like double top high. Could see quite a significant retrace. Support zone all the way down here. We get below that roadmap line, probably coming down here. Could hold the roadmap line and bounce higher, but yeah, it would not surprise me to do that right there. ACN rolling over a little bit. There wasn't much moving pre-market, as you can see. ACN looks like it's coming back to the roadmap line. OFIX choppy sideways, back down to the lows. Yeah, that's a medical. Wouldn't surprise me to make a lower low. NVO, there's a Nova Nordisk. Fat drugs. Oh, don't sneeze. Don't blow everybody out. So Nova got the extensions, may do a retrace, but this thing can keep going ridiculous. Let's compare against Lilly. Lilly definitely outperforming. It doesn't matter what time frame we look at. Put it back to 2002, outperforming. Put it back to just this year, still outperforming. Nova was outperforming. Now Lilly, can they reverse? Sure. So their drugs are similar, but not the same thing. And that's kind of a crazy big up, so it wouldn't surprise me to do another retrace at some point here in the near future. Everybody's talking about AI, but the big players, really these weight loss drugs. Advanced Auto Parts. Ouch. Yeah. It's kind of crazy. Look at that. O'Reilly. AutoZone. And then Advanced Auto. It's like they need to get their crap together. I mean, that's lower than the COVID lows. FNGU. This one leveraged. Be careful. It does have this potential head and shoulders here. If it decides to go, that can take it right up into this 260 area. I've talked about that over and over. UPS getting slammed. Ouch. I guess paying drivers $170,000 a year is not bullish for a stock price. Yeah, FedEx, whole different chart. Wow. Getting punished. probably come around. How far down can we go? Gotta be careful. I mean, this 144, possibly 129 before we find a bottom here. AER. Right down to the roadmap line. Could find support in here and bounce. The aggressive, I gotta move this back down here. I'm losing my tools. The aggressive entry be above that. We break on down, probably going for a deeper retrace. This doesn't look particularly bullish at the moment after rejecting off of that. Could come back down to this zone around 55 pretty easily. Not that far away. And then snow. That's a measured bounce setup. Despite making the biggest losers list of the day. Upside target's 205, 220. And the conservative entry above, probably above 177. All right. That's the list for today. Remember, this afternoon, evening at 5 p.m., I am doing 30 MA, 30 minutes of awesome, where I'll take your request for at least 30 minutes. You want to make sure you're subscribed at the the link all the way over, and hit the bell with the notifications so that you know when I go live, or set an alarm in your phone reminder. Come back at 5 p.m. I'm going live. I'll do 30 minutes of your requests at least. Usually it's an hour, and I usually try to stay till all the requests are done. So if you got questions on a ticker I don't cover, today's your day. Come back at 5. All right. See you later. I'm gonna go pick up my dad. Have a great day, everybody. Bias for the day. Wrap it up real quick. Bias for the day. Bias for the day. Cautious. Very, very cautious. I kind of gave you the levels there, kicking it off. Very cautious right now for a breakout or breakdown. Getting a little green. If we start breaking down, watch the low from yesterday and then the low from Thursday. And we get below those lows, we're going down. If we can break out above yesterday's high and the high from September 1st, we're going up. All right, that's what I'm watching. Those are the levels. It's kind of broad, kind of a nice large range. Anything in between is just sideways chop. So there you go. See you guys later. See you at 5 p.m. I'll be in Discord most of the day. So if you want to do that, links in the description down below.